Hello everyone, and welcome to another episode of the Daily Grey Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today is the 25th of February 2021. Alright everyone, some really big news over the last 24 hours. I'm super pumped to go through it all. So I'll start with the biggest news. Optimism, the scaling technology coming to Ethereum. They're building Optimistic Ethereum, which is using optimistic rollup technology. They announced that they're going to be coming to mainnet in March, right? March is only a week out. They didn't give an exact date here, but you know, we're potentially only a couple weeks away from having Optimism on mainnet, which is absolutely amazing. And they also hired a bunch of really great people as well. You can see here in their blog post. You can read through it. I'll link it in the description. But they hired a bunch of really awesome people here, and people that have been around the Ethereum ecosystem for a while as well, which is really cool. But I mean, this is coming at like the perfect time, right? You know, we've obviously I've been talking about scaling a lot on the Refuel, and it's everywhere right now. It's like Ethereum needs to scale, right? Where's the solutions? You know, we already have some live, and we have more going live every week seemingly now. And now Optimism's come out and said we're going live in March, and they're going to be live, I'm assuming, with Synthetix, because they've been doing a lot of stuff with Synthetix through their testnets. They've teased Uniswap and Chainlink before. I bet they've got like other projects that are going to launch with them as well. Kind of like, I guess, in stealth right now. They don't want to give away that they're launching on them just yet. So I imagine there's going to be a lot of hype around that. If I had to say, I'd say maybe, we're only, less than 2 weeks out from a launch here. I don't know why. I just kind of like think that they probably want to get this out sooner rather than later. And they also announced that they've got a new fresh investment from A16Z. As part of a Series A, so that's really awesome as well. So they've got like capital, obviously, to get them over the line, but this is huge. And I mean, I don't think this is the only thing going live. I think there's other stuff going live in March as well, or in April. Definitely over the next few weeks, that is going to take Ethereum kind of scalability to the next level. There is literally, I feel like in the next few months, we're going to basically not like solve scalability, but it's going to be a thing of like, okay, Ethereum needs to scale to, wow, okay, Ethereum has all this cool technology that can scale it. Let's get everyone onto there, right? Let's just get the adoption done, which I think is going to happen sooner than people think. So yeah, incredible news out of Optimism today. I was super pumped to wake up to this actually this morning. I was like, oh my god, like they actually are launching so much sooner than I thought they would. I thought maybe April or May sort of thing, but to have them going live in March is absolutely awesome. So yeah, congrats to Optimism, I guess, on the raise and announcing this and all the new hires. I can't wait to see this live. And speaking of scaling technology that is going live, DYDX announced that their Layer 2 exchange powered by Starkware is now live in a limited alpha format, so you can sign up and be on the wait list to go live with it. But, I mean, it works, right? Just because it's in alpha doesn't mean it doesn't work or anything like that, or it needs to kind of like be tested or whatever. This is on mainnet, and the reason why I think it's in early access is because obviously they don't want like people just plowing in like hundreds of millions of dollars into it and then something go wrong with it. But basically, what DYDX is, for those who don't know, it's a decentralized exchange focused on perpetual products. So perpetual products are extremely popular in the centralized kind of exchange space, and they don't really work on Ethereum mainnet because of the fact that order book kind of exchanges don't really work on the Ethereum mainnet. So they definitely need a layer 2 home for that. And now what DYDX is offering on their layer 2 implementation is basically zero gas costs for traders. Zero gas costs, right? Not even like, cents or whatever. Zero gas costs. So, that's better than what the, I guess, like quote unquote competitors chains are offering, like low fees. This is zero fees with the security of the Ethereum network, which is absolutely amazing. There's low trade fees as well and minimum order sizes. Instant trading, advanced order types, like really liquid order books. I'm sure they've got a market maker network set up there. You can get up to 25 times leverage. This is absolutely massive. Like seriously, this is just as big as the Optimism news, if not bigger. Because, I mean, probably just as big. I wouldn't say if not bigger. I think, because this is on different technology, it's on Starkware's technology using ZK rollups. It is, different to Optimism because Optimism is using optimistic rollups. But this is, an exchange that DYDX has been around for a while. Their growth has been really great over the last few months, and they've just been hampered by the Ethereum mainnet, right? Because there's only so much growth you can get out of layer 1, being limited to like 15 transactions per second. Now they're going to have thousands of transactions per second on a fully scalable and secure layer 2 ecosystem. So this is just so bullish. I mean, at a time when it is very much needed, the Ethereum ecosystem is delivering scaling. And, you might think this is a recent thing where people are like, oh, okay, scaling has been a big topic of discussion over the last month, and all of a sudden all these things are coming to mainnet. Why weren't they here before? And to be honest, like, this stuff has been talked about for years, developed and researched for years. And I actually wrote my piece in July of 2020 called The Ethereum Scaling War Effort. In that piece, I basically said that, the gas fees were high because of yield farming had kicked off, and I suspected that they would continue to be high, and there was no going back to low gas fees, just because the Ethereum network became such a hotbed for kind of economic activity. So from that kind of frame, in the post, I basically went through all my points as to why I thought the high gas fees were a good thing, and one of the critical points that I mentioned was that it kind of lights a fire under the asses of all these teams to get to layer 2. And that's what they've been developing over the last few months. They haven't just sat on it anymore. Layer 2 became like pretty much one of the top priority roadmap items for all of the DeFi projects in Ethereum. Not just DeFi, actually, all the projects in Ethereum. And now we're seeing the fruits of that labor. Companies like Starkware and Optimism and, Loopring building their own solution and the multitude of others, they are there and here now. They are ready to service these customers, which is just amazing. So, yeah, I mean, I am so absolutely pumped for this. You can hear it in my voice. This is some of the best stuff to happen to Ethereum in such a long time. And I think by the end of this year, the kind of perils of high gas fees for most end users is going to be gone, right? Ethereum's not going to be known as like the whale chain anymore. It's not going to be known as like the high fee chain. And I really think this is really bad for Ethereum competitors because their only claim to fame or their only claimed improvement is the scalability improvement, really. Most of the other stuff is frivolous that people don't really care about. People really only care about the scalability aspect. Now, if you have layer 2 that is just as scalable, if not more scalable than these other Ethereum kind of competitors, that is secured by the Ethereum base chain, then why would you go anywhere else? So this is incredibly bullish. I don't think people realize how bullish this is. I don't think people realize how much of a shelling point all this layer 2 technology is for the Ethereum ecosystem. And what I mean by that is that why go and risk building on another chain with no users if you can just build on layer 2, get the kind of like same or better scalability with the security of Ethereum. So that's what's happening. Keep an eye out over the next few weeks for more of this news coming out. I mean, I'm definitely going to cover it every single time on the Refuel to keep you guys updated because I think that it's worth paying attention to this above all else right now. I mean, to me, there's a lot of stuff happening in Ethereum, right? We have the NFT explosion. We have ETH2 still being developed. We have ETH1 improvements, EIP 1559, all that. But scaling is the most important thing right now by far. There is nothing more important than scaling Ethereum because if Ethereum doesn't scale, it will lose eventually. Like I can guarantee it will lose, right? But the thing is the reason why I don't think, the high fees are bearish right for now or like the kind of like usability hits are bearish is because Ethereum is scaling. We are scaling across so many different kind of places with so many different technologies. There's hundreds, if not thousands of people working on this now and they're so smart. They've been in the ecosystem for a long time. They believe in the Ethereum mission and they want to scale it. So yeah, stick with it a little bit. I promise you by the end of this year, like I strongly believe that the high gas fees will not be a problem for end users anymore. You'll be able to sit on layer 2 and do all of the cool stuff you were doing on layer 1, basically free, which is going to be incredibly bullish for the overall ecosystem, I think. But anyway, I digress. I'm getting too ahead of myself here, I think. But at the same time, I mean, it's just very hard not to be excited about this stuff right now. Another piece of exciting news out of the Chainlink ecosystem was that their off-chain reporting, or kind of abbreviated as OCR, is now live. This is a scalability upgrade for Chainlink because it reduces the gas cost of the Chainlink price feeds by 90%. Now, this is amazing because for those who don't know, it's actually very, very expensive for Chainlink node operators to post the price feeds to the mainnet because the rest of DeFi basically relies on oracles, right? Especially Chainlink oracles. You cannot cheap out on the transactions. You cannot say, oh, I'll just wait like an hour for my transaction to go through and I'll just pay less gas because that's fine. No, the oracles need to be updated. They need to be updated regularly. And this costs tens of thousands, if not hundreds of thousands of dollars a day, right? Because of the fact that the Ethereum network is so congested. Now, what this Chainlink's off-chain reporting does is it basically aggregates all the signatures together and only posts the proof of the signatures to the mainnet. So you can see here on the kind of graphic here, it explains it. Off-chain, all the Chainlink nodes kind of post their kind of price feeds, and that gets kind of computed off-chain, and then just the proof of all of that gets posted on-chain. So it's still just as secure, just 90% cheaper. So this is just, I mean, this is the power of cryptography. I mean, I spoke about Justin Drake's podcast with Bankless a few weeks ago and how that's a highly recommended listen, because cryptography has typically been a very theoretical field with no kind of like great applications for most of it. Like cryptography obviously backs a lot of the stuff that we know and love, but a lot of it was still theoretical and didn't really have a practical use case. Now it does with Ethereum, with DeFi, with all this kind of stuff we're doing with blockchain. It has a very practical use case, and this is just one of them. And reducing the gas costs by 90% by using this novel technology is absolutely amazing. So, really bullish news out from Chainlink on the scalability side as well. So I put out this tweet today, and I'll read out the tweet. I said, could you imagine coming into the Ethereum space over the last few months, finally getting your head around how DeFi works, only to be hit with the craziness of NFTs? This ecosystem is insane. This is just funny to me because, like, catching up with DeFi from zero, right? Say you come into the Ethereum ecosystem, you're brand new, you have to first learn how Ethereum works, right? So there's that aspect to it. But then you're trying to learn DeFi. You head down the YouTube rabbit hole, you maybe watch a few Daily Gwei videos, right? You maybe read a few of my newsletters, you might check out Ether, Bankless, DeFi Dad, all that good stuff, right? That takes some time. It takes months. And you get your head around how DeFi works, why it's world changing, and why it changes the game with regards to finance. Then you just hear these things about NFTs, and you're like, what the hell is NFTs now? And then you go down the NFT rabbit hole, which I actually think is deeper than the DeFi rabbit hole, because NFTs have a much broader kind of appeal to much more people as well. In terms of like the foreground, DeFi and finance is more of like a background thing that most people don't really think about within their day-to-day lives, whereas NFTs are like a form of entertainment, which you do think about kind of day-to-day, depending on, how much you're into like the creator space and stuff like that. So that is just another rabbit hole that, is just crazy to be hit with while you're new to the ecosystem. And I mean, there needs to be a 0 to 100 guide or a 101 guide for Ethereum, basically. I know Bankless has some stuff. I know DeFi Dad has some stuff. The Deviant also has some stuff and stuff like that. I don't have any structured stuff just yet in terms of like on the Daily Gwei on ETHUB. I want to do stuff like that. But there's so much to do, right? Like, you have to think about it. You have to first explain how Ethereum works, and then you have to explain how DeFi works from under the hood. Then you need to explain each DeFi app. Then you need to explain all the infrastructure powering all of this, right? So, depending on how deep you want to go down the rabbit hole, it can take a considerable amount of time. And then after all of that, by the time you've caught up, there's some new use case like NFTs that just comes out of kind of nowhere. I mean, NFTs have been around for a while, but like the popularity has only sprung up over the last, I guess, 3 months or so. So yeah, I don't envy anyone coming into the ecosystem right now in terms of like having to kind of like catch up and feeling overwhelmed. But at the same time, they get to experience all this stuff for the first time again, which is always exciting. So yeah, if you're one of those people, I mean, and you're listening to The Refuel, definitely just keep, listening to me ramble on. Check out Bankless, check out DeFi Dad. He does his YouTube channel and he does Yield TV as well. Check out the Defiant, check out all of that, because it's just a really great resource for you to kind of, really great resources, for you to keep track of what's happening, because it is definitely really hard. And don't feel disheartened if you can't keep track of things. It's like me, I spend like every waking hour in the Ethereum ecosystem. I really don't do anything else these days. Maybe I'll watch a show every now and again, or play some video games sometimes, but most of it is spent in Ethereum, and I still can't keep up either, right? Half the reason why I do these refuels is because it helps me keep up with the ecosystem as well and keeps me on top of things, and educating is actually a really nice way to kind of refine your own knowledge too. So yeah, don't be disheartened if you can't keep up right now, because not even I can keep up, and I doubt anyone can keep up. It's like trying to keep up with what's happening on the internet. It's just impossible. So, if you've only got a limited amount of time, find something that you enjoy, right? Whether it's NFTs or DeFi, find a little community in that and spend some time there. Don't try to be everything to everyone. Don't try to be involved with absolutely everything. Yeah, you'll miss out on opportunities in terms of like investments and stuff, but you'll be able to hone in your kind of like craft on one particular thing that you actually kind of understand deeply and want to be involved with deeply, rather than spreading yourself too thin, which I think is pretty important. So Ryan Sean Adams from Bankless here put out a really interesting kind of comment, and I won't read the whole comment here, but basically it's more than a comment. It's like a story of when he was kind of like a validator for, I guess, Cosmos as part of his validator company. And for those who don't know, Cosmos is a distributed proof of stake system, similar to other systems like EOS, where you basically, as a token holder, you delegate your stake to these supernodes, essentially, to run the network for you. Now, the TLDR is that Ryan's experience as a Cosmos validator left him jaded and made him more bullish on Ethereum. Now, I mean, I'll let you read this. It'll be in the YouTube description, the full post. But basically, the reason he says this is because there was a lot of insider dealings. There was a lot of kind of like shadiness going on. There was a lot of cartelization. And this is what happens when you have a distributed proof of stake system, because there is no sense of individuality. It's basically you have to kind of like either become a validator and get people to delegate to you, or you have to delegate your stake to someone else. So, and becoming a validator is very hard because there's a lot of insider deals that go on, right? There's a lot of like pay to play sort of stuff going on. And unless you have like a name for yourself, or unless you have like a company that you run, it's very hard for you to become a validator. Now, in Ethereum, with specifically Ethereum 2.0, you can become a validator, right, and not have to, like, just with the 32 ETH minimum, or when the decentralized solutions go live, you'll be able to stake with less than that. So, you know, the 32 ETH minimum to be a validator, like, yes, it's about $50,000 something right now. That is still a way lower barrier to entry than trying to become a validator in one of these DPoS systems. And there are actually like tons of disparate validators on the Ethereum network right now. And don't get me wrong, I mean on the ETH2 network, don't get me wrong, ETH2 stake can still centralize on exchanges and stuff like that. But I think it's a bit different, where exchanges don't really have the incentive to work together, right? At least most of them, to collude or to like do things like that. Whereas these kind of validators on DPoS systems do, because they can basically say to each other, you know, delegate to me, or like just let me have all the stake, and we'll share the fees, like through backroom deals essentially, or we'll share the block reward. So there's that. Whereas centralized exchanges, a lot of them don't really play nice with each other. Like I can't imagine like Coinbase and Binance playing nice with each other, right? For example, they're definitely like very harsh competitors. So there's a lot of that too. But yeah, read this. It'll be linked in the YouTube description. You can go give it a read for yourself. I think it's very important to understand the context around why Ethereum proof of stake is very different to distributed proof of stake, because it just turns into a cartel, and that's not what we want for like a base kind of money system, right? A base layer that we want to be maximally decentralized, right? And we want it to be neutral and kind of censorship resistant. That you just don't get that as part of like distributed proof of stake, basically. So Fiskantis posted this blog post today from 0x, and this is actually a blog post that 0x published back in September of 2020, but it's called Scaling DeFi at Layer 1, and it's basically a very deep dive into all of kind of Ethereum scaling challenges. And it's amazing. I read this piece back when it came out. It's about a 17-minute read, as you can see here. But this piece is absolutely amazing. If you want to know why it's so hard to scale Ethereum while retaining its decentralization and security properties, this is probably one of the only things you need to read to give you a very nice summary of it. So I definitely recommend going and checking this out. Of course, I'll link it in the YouTube description for you to do so. But, this is going to give you the knowledge that you need to be able to fight the FUD as well. Like fight other kind of, people or other people from competitor chains saying Ethereum can't scale, blah, 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 right? This will give you the ammo for that, which I always, I'm a very big fan of, because knowledge is power, right? So definitely go check this out. I won't ramble on about this too much because I won't do the post justice. I just think you should go read it for yourself for sure. So Trent Van Epps posted to Twitter today that he's been working with Tim Byko, which is the ETH1 kind of core devs coordinator here, and also the lead on EIP 1559. So he's put together a list of all the projects that are in favor of EIP 1559. And you can see here the list of support from all the big projects, right? We have 1inch and Aave, AirSwap, right? You keep going down the list, Compound, Curve, all these things, MakerDAO, Synthetics, all this kind of stuff, right? And then you have some neutral parties like Etherscan, right? Which obviously makes sense to be neutral. I think Compound, is neutral as well. Infura is just like abstaining, didn't give a position, but they said that they'll be ready to support it if that's what the community wants and everything like that. So yeah, I think this is really good because obviously there's miners pushing back against this. And I actually saw today that Sparkpool has announced their opposition to EIP 1559, which means now over 50% of the hash rate is in opposition. But as I've explained on the refuel before, I'm calling the bluff on this. I think it's total bullshit. I think they're just trying to kind of play, whatever hand they have here. And I just don't think they have any cards, right? I think that the Ethereum ecosystem outside of miners holds all the cards. I think the game theory will hold. I think they will all mine the 1559 chain. I can't believe I have to kind of like I have to look at this and kind of see this, because we have precedent for this. If you go back to 2017, during the Bitcoin Cash split, right, that was way uglier than what this is now. And just before the fork was scheduled to go live, the Bitcoin Cash camp, right, okay, let me take a step back. The way it worked was that in 2017, there was a camp and a significant amount of the mining kind of hash power that wanted to basically fork Bitcoin, right, and increase the block size. But, you know, fork not as a separate network like Bitcoin Cash, but actually fork Bitcoin itself, right, and create and make Bitcoin have bigger blocks. Now, they, right up until pretty much the day or like 2 days before the hard fork was scheduled to happen, they were adamant about this. Then they completely changed their tune and said, oh, okay, well, we won't actually fork, you know, Bitcoin and force everyone to adopt Bitcoin. We're going to fork it off and just create our own network called Bitcoin Cash, right? And that's what happened there. Now, it was an ugly split. Don't get me wrong. There were hash wars. There were price wars. It was not pretty, right? But at the same time, it's precedent, right? And precedent matters in this space more than you will believe, right? So I think that it's the same thing's gonna play out with 1559. Eventually, we're gonna have like this capitulation from miners because they realize they haven't got any more hands to play, right? I don't think they're gonna fork off into their own little network. Maybe they do for like a very short period of time, and then when they realize none of the projects have followed them, none of the ecosystem has followed them, no infrastructure providers have followed them, right? They're mining a dead chain, and no exchanges have listed the token. You know, that's when they'll just come back to mining on the 1559 chain. So this is all empty threats to me. I don't believe that there's going to be any kind of like attack on the network, right? It just doesn't fit in with the game theory. It does not make sense for miners who are concerned about a pay cut over 1559 to basically blow themselves up, right? To basically say, well, we're not going to mine on this. We're going to, you know, blow the network up. We're going to basically do something really bad on the network. We're going to attack the network. Why the hell would you do that, right? You not only are you getting a pay cut from 1559, right, but you're basically shooting yourself completely in the foot because you're getting nothing. And you're basically making it so that the miners that are with your mining pool will probably just leave and be like, well, I can't trust this mining pool anymore. They're just, you know, using my hash to do things that, you know, maybe I don't necessarily agree with. So yeah, for anyone who's concerned about this, don't be. I mean, I'm pretty confident that, you know, this is a nothing burger and they're just bluffing. I'm almost 100% confident. Like, obviously, there's always that small percentage chance that it happens because some miners maybe are just like want to go all kamikaze and blow themselves up. Whatever, be my guest. But the game theory and the economic incentives point to miners adopting 1559, right, and just going along with it. Because a small pay cut from 1559, relatively small, as opposed to literally blowing themselves up and getting nothing, I mean, you can already tell what the direction is here. So yeah, I'm not concerned at all. So yeah, just I'm really glad to see all the kind of like projects supporting it well, like publicly, because that adds a lot of support in general. The exchanges are pretty much like some of the kingmakers as well. I mean, I wouldn't say they're the kingmaker in that what they say goes, but they hold a lot of weight, right? But the exchanges usually follow what the rest of the ecosystem wants. So I expect, you know, eventually as we get closer, as we get a date, Coinbase and all this other stuff will come out and say we'll support it. And surprisingly right now, Binance's mining pool is actually in support of 1559. So, you know, I don't know if they're going to change that to opposition because they've been kind of attacking Ethereum lately, so maybe they will, but at the same time, I think Binance is aware of the game theory behind this, and they know that, you know, they're just going to mine on the 1559 chain anyway. They're not going to try and blow Ethereum up because they're profit maximalists at the end of the day, and Ethereum is still extremely valuable to them, so there's no, I just don't think there's any chance, or at least like a tiny chance that this happens, so yeah, good to keep that in mind. So we had another DeFi project announce itself today called DFX Finance. So I think they've been around for a little while now, kind of on Twitter, but they announced the funding round of $5 million led by Polychain and True Ventures. And they also brought on a bunch of angels, as you can see in the other tweet here. But what DFX Finance is, it's a decentralized foreign exchange protocol. So for stablecoins. We need this badly within DeFi, right? I am sick of having to use USD for everything. I am in Australia. My native currency is AUD. I have to pay my taxes in AUD. So anytime I use USD, I have to account for the fluctuation in the USD AUD rate. And I absolutely hate it. So this is a very welcome kind of addition for me here. I can't wait to see them go live here and kind of grow. Obviously, growing liquidity for new stablecoins isn't easy, but I have confidence that, you know, that there's enough demand for this sort of stuff that we're going to see more of it play out. So obviously they Oh, so they already launched a liquidity mining program with 3 other stablecoins. CAD-C, I'm assuming that's the Canadian dollar, Euro, and the Singapore dollar, I think. So, come on, guys, where's the Australian dollar? Please. I'm guessing they'll put that in soon, but I think we can bootstrap this ecosystem here because the demand is definitely there for it. So for all my fellow Aussies that are listening into this, I'm confident we'll get an AUD kind of stablecoin soon, and I'm looking forward to seeing how that happens and how that grows, because I would love more than anything to be able to yield farm with AUD instead of USD, because it'll save me so many headaches on the tax side of things. So ETH2 hit over 100,000 validators, which are committing 32 ETH each to the network, totaling I think 3.2 million ETH at this stage, 3.1 million ETH as you can see in the screenshot here. So yeah, as I was saying before, right, DPoS, there's only a handful of validators. Usually it's like 21 or something. I think Cosmos has more than that, but in terms of like validators that control the network, or control the majority of the stake, it's usually a small number. So yeah, this is 100,000 ETH2 validators, over 100,000, which is just going to keep growing as more people kind of stake their ETH here. So really, really awesome to see. I'm excited to see this grow. I guess like when Coinbase goes live with staking, as Alex says here, we'll see how much ETH they add. And I said kind of yesterday, I think, or the other day when Coinbase announced their waitlist for staking, I said that I think they're going to stake like 1 million ETH or something like that. Maybe they will, maybe they won't. I don't know, but there's a good chance they're going to stake a healthy chunk of ETH as well. So that's going to be interesting to keep an eye on for sure. So the block has launched their new DeFi dashboard as part of their data section here. That basically measures a bunch of different kind of metrics across the DeFi. So you can see here, if it loads, that they're measuring protocol revenue of different DeFi apps based on the daily revenue, the monthly revenue, cumulative DeFi revenue by recipient, and annualized DeFi revenue by protocol and things like that. This is just another amazing addition to their kind of data dashboard they've got here. I mean, I've talked about it on the data pump video series that I do, and I'll be covering it in next month's edition as well. But basically, these are some really nice dashboards. I check these regularly, and you can see the growth here on DeFi, right? The protocol revenue growth and everything, and the DeFi revenue growth has just been absolutely awesome. And I think this is a really great way to keep track of protocols that are growing in revenue, but maybe their token price isn't really doing anything because people aren't paying attention to it. And then that's how you get some alpha as well. So yeah, kudos to the block for launching this. I'll link it in the YouTube description. You can go check it out for yourself as well. So Ryan Watkins from Messari has posted that Ethereum is on pace to settle $1.6 trillion of transactions in just the first quarter of 2021. And you'll remember that I said that on one of the refuels a while ago, that in 2020, Ethereum settled just over $1 trillion. Now we're settling $1.6 trillion in just the first quarter of 2021. And we haven't even gotten the layer 2 solutions live yet in a big way, right? And just because the layer 2 solutions don't settle like most of their value to kind of Ethereum directly, they're still settling to Ethereum as part of their kind of proofs that they have to post to Ethereum. So that is all additive. But the fact that we already have 1.6 trillion in the first quarter is incredible. And if we annualize that out, right, we can get to like $6 or $7 billion just for 2021. I suspect that's going to keep growing. And it's absolutely incredible that we're settling this much value. And can you imagine when EIP 1559 is in? These fees are going to be being burnt, right? We're going to be adding so much fundamental value for ETH on this side. So incredibly bullish here. And Ryan also notes that in the last 12 months, Ethereum has also settled $2.1 trillion in transactions. And you can see the nice little kind of chart he has here that my face is blocking on the video, but you can see, on the right hand side, just how much the growth has been explosive, right? And we've all felt it. The growth obviously comes with pains like the fees and things like that, but still very, very awesome to see all this growth. So yeah, kudos to Ryan for putting this out. I really love whenever he puts out one of these charts because it just, this just reinforces the fact that Ethereum is going to be the world's kind of global settlement layer for all types of value and the most secure one at that. So yeah, really, really awesome growth to see here. All right, that's it for today's episode, everyone. Thank you again for listening and watching. If you haven't done so, give that video a thumbs up, subscribe to the channel, join the Discord channel, and subscribe to the Daily Gwei newsletter, and I'll catch you all tomorrow. Thanks, everyone.